options market is flashing a warning sign to investors of all stripes, with JP Morgan warning we could be setting up for Volmageddon 2.0. So what's got them worried? The recent trading uptick of risky 0 days to expire options, or contracts that expire the day they're written. The activity has increased so much that Nomura reports nearly half of the options trading on the S&P are 0 DTE. Some on the street even blaming them for the current divergence between stocks and bonds. Doesn't mean these stock rallies are a dangerous mirage. Let's bring in Chris Murphy, co-head of derivative strategy at Susquehanna, and our own Mike Santoli. No pressure, Chris. But first of all, can you just comment on how unusual this is?
Hey, Kelly. Yeah, had a huge increase in this 0 day to expiration type trading, and just within a week, a couple day expiration. One thing to keep in mind is it's pretty much all opened and closed, or bought or sold, or the reverse over the course of the day. So there really is no time to build up these massive offside positions. So when I hear about comparisons to Volpocalypse, remember that took an entire year, which was 2017, of just relentless selling of volatility until these positions got so big, both institutional and retail, that it finally unwound. Option trades that occur over the course of 1 day and then expire, that they're basically wiped clean the next day. So, I'm not seeing, what some of those comments you just mentioned.
Yeah. Would you say, Chris, that you see other signs in options markets or just in general in terms of positioning that point to either, worrisome complacency or extended risk taking or anything like that?
Well, look, volatility levels are down from where they were last year. They're down from where they were during COVID, but they're still elevated compared to long-term history. So I wouldn't necessarily call it complacent. We've seen an increase in skew, which everybody likes to look at as well. But that might just be because people are building up their positions and need to hedge a little bit more. And those tail options don't come in nearly as quick when the rest of the volatility comes in. So I'm not seeing quite as many of these risky signs as maybe some others are.
Sure. Mike, what do you think explains the sudden popularity of these types of options?
Any tool that is introduced that creates a more targeted ability to, bet on the next move, the next short, period of time ahead of us is going to get outsized adoption. It's just the way it is. They introduced leaps, these long-term options. Yeah, sure, they were useful on paper, but they don't create that sort of two-sided activity in the moment. So I think that the market trading community is always going to kind of rush to adopt these things. There's another sense out there that they've been integrated in a lot of kind of quantitative trading models. There's really arbitrage going on below them, a lot of writing of options on an intraday basis, trying to capture interest rate moves. It's pretty complex, but I won't deny retail investors have definitely flocked to them too. It's become popular. It's become a popular talking point. I'm not opposed to the idea that it perhaps alters the intraday rhythms a little bit. You have dealers that have to hedge exposures if you do get a short market move, but I just don't really believe this is the cause of directional market moves. Principally, as Chris was saying, you don't really have time for people to be loaded on one side of the boat, but choppy within a range and ping-ponging between various index levels, that I can see being the case. And then if it gets too stressed in a given day, because of fundamental news, maybe it helps as an accelerant to create some kind of short-term cascade. But I don't know exactly how it could build up in a big way.
Right, because Chris, the argument is, people are scratching their heads about why stocks have rallied so furiously, even with bond yields on the rise lately. And this is cited as one explanation that, well, it's all this positioning, it's all this options activity. Do you think there's any element of truth to that?
No, I just think it's happening at the same time. From that chart you showed a minute ago, the uptick in option volume started right around COVID, for various reasons. But then, volume just, brings in more volume. And the liquidity in the most active trading names is the best it's ever been. So you're able to get in and get out. You're able to get a lot of exposure very quickly. You're able to play all these macro events. So no, I don't really think that the increase is related. Now, you might see an increase in call volume as the markets start to rally because investors are chasing that momentum. But I don't think it's causing it. Once again, it's following, but not causing.
Sure. And real quickly, Mike, does it though? Could you kind of put it in the ledger as another sign that maybe there's still more liquidity out there than we thought? If we're all describing this as retail investors, and I heard a lot of this activity going back a couple of years, people hit the triple Qs and the T triple Qs and all the rest of it. So What does that tell you that they're still this popular, or have they become more institutionalized?
I think it's both. I mean, yes, there's certainly a certain level of liquidity. If by liquidity you just mean reliable two-way action, I don't think it's about, people finding themselves with a bunch of money they didn't expect and they're going to put it in options. It really isn't that. I mean, I feel like it's part of the reason people like it is it's really low cost on an absolute dollar basis. So it doesn't take much money for this to actually happen. And I would just say every single time there's been a financial innovation, I go back to before ETFs and HFT and VIX futures and options and weekly options. And every time people say, this is the tail wagging the market dog. And it tends not to be the case. It changes the rhythms and the speed, but I just don't think it has directional power to really drive market trends.
It's a great point. I'm smiling because it resonates. Guys, thank you both. Really appreciate it today. Michael Santoli, Chris Murphy of Susquehanna. Coming